10 Best Investments in 2024. Are you looking to navigate the uncertain market landscape of 2024 with confidence and success? Whether you're a cautious investor seeking stability or a risk taker eyeing high returns, our carefully curated list of the 10 best investments for this year has something for everyone. Investing in 2024 requires a strategic approach, given the current economic climate's twists and turns. To help you make informed decisions, we've compiled a diverse list of investment options that cater to various risk tolerances and financial goals. Starting with safer choices that prioritize capital preservation, we'll gradually move towards higher-yielding options that may involve greater volatility. By balancing these investments, you can create a robust portfolio designed to thrive in any market condition. Why invest? Investing offers numerous benefits, from providing an additional source of income to funding your retirement or even helping you navigate financial challenges. Most importantly, investing grows your wealth, enabling you to achieve your financial goals and enhance your purchasing power over time. Whether you've recently sold your home or come into a windfall, investing is a smart way to make your money work for you. While investing can build significant wealth, it's crucial to balance potential gains with the associated risks. To invest wisely, you should ensure you have manageable debt levels, an adequate emergency fund, and the ability to weather market fluctuations without needing immediate access to your invested funds. Number 1. High-yield savings accounts. A high-yield online savings account pays you interest on your cash balance, similar to a traditional savings account at a brick-and-mortar bank. These accounts are highly accessible, making them convenient vehicles for your cash. The main advantage is the higher interest rate compared to standard savings accounts, which helps your money grow more efficiently while still being easily accessible. High-yield savings accounts are ideal for those who need to access their cash in the near future. These accounts offer a safe place to park your money while earning a better return than a typical savings account. Number 2. Long-term certificates of deposit. Certificates of deposit, CDs, are issued by banks and generally offer a higher interest rate than savings accounts. Long-term CDs, which have longer maturity periods, can be especially attractive when you expect interest rates to fall. CDs are well suited for retirees who do not need immediate income and can afford to lock up their money for a specified term. They are also a good choice for risk-averse investors looking for a safe investment with higher payouts than savings accounts. CDs are particularly beneficial for those who need their money at a specific future time and are willing to trade liquidity for a higher yield. Number 3. Long-term corporate bond funds. Corporations raise capital by issuing bonds, which can be packaged into bond funds. These funds typically hold bonds from hundreds of corporations, diversifying the investment. Long-term corporate bond funds are excellent for investors seeking steady cash flow, such as retirees. They are also suitable for those who want to reduce overall portfolio risk while still earning a decent return. These funds offer higher yields than government bond funds and are ideal for risk-averse investors who are looking for a balance between safety and return. Number 4. Dividend stock funds. Dividend stocks pay out portions of a company's profit to shareholders, typically on a quarterly basis. Dividend stock funds bundle these stocks into a single investment, providing regular income while diversifying risk. This setup allows investors to benefit from dividend payouts without the need to pick individual stocks. Dividend stock funds are suitable for almost any stock investor, especially those seeking regular income. These funds are particularly attractive to investors who need income and are willing to stay invested for longer periods to benefit from compounding returns. Number 5. Value stock funds. Overview. Value stock funds invest in stocks that are considered undervalued compared to the broader market. These stocks are typically priced lower relative to their fundamentals, such as earnings and dividends, making them appealing bargains. Value stock funds aggregate these undervalued stocks into a single investment vehicle. Value stock funds are ideal for investors who are comfortable with the volatility associated with stock investing and have a longer-term investment horizon of at least 3 to 5 years. Number 6. Small-cap stock funds. Small-cap stock funds invest in the shares of relatively small companies. These companies often have strong growth prospects, and many of today's largest corporations started as small caps. By packaging dozens or even hundreds of small-cap stocks into a single fund, investors can easily gain exposure to this potentially lucrative market segment. Small-cap stock funds are ideal for investors seeking attractive long-term returns and who are able to commit to an investment period of at least 3 to 5 years. These funds can experience significant volatility, so they are best suited for those who can tolerate market fluctuations. Despite the risks, the potential for high growth makes small-cap funds an appealing option for growth-oriented investors. Number 7. Real Estate Investment Trusts Index Funds. Real estate investment trusts, REITs, are companies that own, operate, or finance income-producing real estate. REITs are required to pay out most of their income as dividends, which are then passed along to investors in REIT index funds. These funds provide diversified exposure to various real estate subsectors, such as lodging, apartments, and offices, without the need for direct property management. Number 8. S&P 500 Index Funds. An S&P 500 index fund tracks about 500 of the largest companies in the United States, including many of the world's most successful corporations like Amazon and Berkshire Hathaway. This broad market exposure makes it a popular choice for investors seeking diversified investment in the U.S. stock market. Number 9. NASDAQ 100 Index Funds. NASDAQ 100 index funds provide exposure to the 100 largest companies listed on the NASDAQ stock exchange. These companies are often leaders in the technology sector, including giants like Apple, Alphabet, and Microsoft. The fund offers a way to invest in some of the most successful and stable tech companies without having to pick individual stocks. NASDAQ 100 index funds are suitable for investors seeking growth and willing to handle significant volatility. These funds are ideal for those who can commit to holding their investment for at least 3 to 5 years. Utilizing dollar-cost averaging to invest can help mitigate risk compared to investing a lump sum all at once. Number 10. Rental housing. Investing in rental housing involves purchasing and managing properties to generate rental income. This strategy requires selecting the right property, financing or buying it outright, maintaining it, and managing tenants. With housing prices cooling off and interest rates stabilizing, now might be a good time for strategic real estate investments. As you consider these 10 investment options for 2024, remember that diversification and a clear understanding of your financial goals are key to successful investing. By blending safer, capital-preserving investments with growth-oriented, higher-risk opportunities, you can navigate the market with confidence and set yourself up for financial success. Happy investing!